All right, folks, welcome back. This is our economic calendar for the coming week, September 9th through the 13th, 2019. On Monday, London Open, we have GBP with GDP, high impact and manufacturing production. On Tuesday, London Open, we have medium impact average earning index. And on Wednesday, New York Open, medium impact core PPI. Thursday, we have OPEC meetings, and the heavy hitter is obviously the ECB press conference and monetary policy statement and main refinancing rate, high impact all through the New York Open, and CPI, high impact for dollar. Friday at New York Open, high impact core retail sales for the dollar index and preliminary consumer sentiment for the dollar at medium impact at 10 a.m. Friday. We will be treating next week the same way we treat non-farm payroll because of the ECB. Okay, so that means Monday, Tuesday, and Wednesday, New York Open cuts you off. In other words, if you've made your profit, Wednesday, New York Open, move to the sidelines. You don't want to be in there during the ECB conference, okay? All right, so before I go over to the charts, a lot of you guys signed up for this month, so I kind of want to spend a couple minutes before we go into the charts. Students come into this mentorship, and not all of them stay because they are looking for what they think they should have versus trusting me, giving them what you should have. Okay, I give it to you in bite-sized pieces, but I also, you can go back in my videos and find where I specifically talk about certain things and how you go in and practice it. If you're just watching my videos and you're not applying yourself, especially in the areas of where I draw your focus and your attention, you're wasting your money and your time here, okay? Nothing magical is going to happen by you watching my videos. You're going to be becoming more familiar with the concepts. And, oh yeah, I know what he means by that because I'm pointing it out to you in the chart. But you're not going to get this on your own unless you put the time and energy into practicing and searching it yourself. I don't provide you signals, but I provide you the groundwork so that way you know where they're going to form. Then you use the information you learn and all the content and the concepts in theory, and you apply it to your study with that in mind. So I'm lending you my experience where the setups are going to form. That's why we're in that 90% bracket. Every single week, things I'm talking about, they pan out. It's up to you to go back into the previous recordings. Maybe it's 2 recordings before the most recent one. Like this recording here is being done September 7th, 2019. It's Saturday. It's 4 o'clock in the afternoon, my local time. I had to produce this video and put it up by 5 o'clock or within the 5 o'clock hour. I may be referring to something that occurred in the Wednesday market review that just passed, or something that may be referred to in the previous weekend edition of the market review. Okay, so it's important if I ever say things in the recordings, I think this is what's going to happen. I give you a specific price, a target, and a bias. Okay. Now, again, let me preface this by saying this is not a signal service and it's not meant for you to take these things and put live money because you're not supposed to be trading live money here. I'm teaching you price action. So for compliance reasons, we're always demo. But I know invariably some of you are chomping at the bit to make money. You're going to be throwing money into a live account and trading on these things, and because you don't know what you're doing, you're going to mismanage it and you're going to hurt yourself. That's the reason why I have an agreement. It's a risk disclaimer. It more or less removes any repercussions against me because of you not listening. All right. I will say this. If you do what you're supposed to do here, you're going to know where price is going to go. And you read between the lines there. And you know what I'm saying. Okay. I'm saying don't trade with live funds while you're learning. Okay. learn it first, and then you decide whether or not you're going to do it. All right, so with that, let's go over to the charts. All right, so we're going to be doing specifically just a review, and also I'm going to highlight what is important for you when you go through these recordings. You need to be having a pencil or pen, preferably a pencil because you're probably going to make a mistake, and writing down anytime I say a specific condition, or if I think a certain scenario is going to unfold. I may give you the bullish and bearish side that would more or less negate, okay? But I'm not saying you pick a direction or whatever, and whatever comes out, I'm going to be right. I'm telling you which one I prefer. And I challenge you to go back and listen to all the recordings. You'll hear me tell you what would negate the idea for me, and then I would probably look the other direction. But I tell you, but I believe this is what's going to happen. Okay, so there's some jokers in here that still, want to nitpick and try to find something wrong, okay, because of frailties in their own character. I'm giving you what it is that you need. You need to be paying attention. If you're not writing it down, shame on you, because the work is yours to do, not me. I know this stuff. You're learning it. So I'm going to give you specific times in this video here where you can go back and listen to the recordings, okay? And I know some of you download the videos and you save them on your computer so you can see clearly. I'm not going in and editing anything and putting it in there to make it sound smart now that it's already happened, okay? That's why it's important for you to write down the locations in the video, the times where I say certain things, and then annotate your own study journal. For instance, this recording is September 7th, 2019, weekend edition. And then whenever we get to a specific currency, like we always start with the dollar index, okay? So the things I would say on the dollar index, if I say something that's highly specific about a specific price level, a direction, a bias, a scenario unfolding, jot that down so that way you know what it is that's at that time in the video. And then you can go back and listen to it again. And then you compare, does the things that I talk about unfold? The lazy folks don't do this, and they convince themselves that they're wasting time. I don't know what I'm doing, or it's guesswork, or whatever it is, okay? It's always some excuse. But you can't deny it. If you put the work in, the things that I talk about happen in about high 90s, really, high 90%. So I'm saying this as a reminder, because if you're just watching videos like you're watching Seinfeld editions, okay, or whatever else you might be interested in watching television, because I don't watch TV. If you're just looking at it as a binge watch and you're really not applying yourself and taking notes, and then taking those instances where I draw your attention and then going right into the charts and studying it, even if you can't do it live, go back and look at it after you go home from work and see if those things just pan out like the script, okay? That's what I'm talking about. When people do that, they're hooked for life. They're never going anywhere. They're never going to change course in terms of how they're going to look at the market. They're going to be doing what I teach, because there's nothing like it. So again, we are talking about the dollar index. I mentioned in the dollar that there would be a daily wick that would form coming down into this order block here, and it was at the 15-minute mark of last Wednesday's video. So all you have to do is look at the video right above the posting in the forum for this particular video, that previous Wednesday, play that video, and at 15-minute mark, you'll hear me say, if the market comes down on one single candle into this order block, approaching this mean threshold, if it does that and comes all the way back up and closes above the order block, that could set the stage for a bullish scenario going into next Monday. So right away, that's what I'm looking for right now, because we've had that scenario here. So on Monday, I'm waiting to see, do we have a indication that the dollar wants to make another attempt? Because it could very easily try to make a run back up into this old high. It doesn't mean it won't or will or won't break through. It just means that this is where I'm looking for, and maybe close up some of this imbalance in here, okay? It's not a weekly bias. It's not a be-all, end-all. It's not the absolute outcome. It's just something I'm watching going into Monday. Now, you understood, because we just mentioned in the economic calendar portion that we always do at the very beginning of every video, that Monday, Tuesday, up to Wednesday's New York Open, that's our sweet spot because of the ECB announcement coming out on Thursday. We're treating it just like non-farm payroll. Now, I personally believe that Monday and Tuesday will probably be the best trading days, and then it'll become whatever it'll be in terms of the delay and wait for ECB's decision about what they're going to do. With that said, if we do trade up to this level here, I will be looking for some reason to want to go short dollar and long foreign currency at that moment. Now, if we plow right on through this and doesn't give me any, SMT, nothing really lines up with the other foreign currencies to validate that, then, I'm back to thinking this may blow out and create another higher high. How we trade at these levels is what's key. That's the part that I'm sharing the experience factor. I don't know if we're going to hit this level and trade down, and I don't know if we're going to hit this level and trade through. That's why I have to sit and wait. Now, it doesn't mean that we're clueless. It doesn't mean that we're guessing. It just means that we're waiting for more information to make a trade decision. Clearly, you can see that I can make educated decisions, and they pan out pretty good. The student base here, you don't have that yet, okay? And I know sometimes you watch me give the analysis portion of these reviews, and I'm probably sweet talking into an idea that you want to trade, and you get fixated on that only, and you only think about that one potential outcome, and you don't have the experience to see when it doesn't no longer hold the same appeal or probabilities for panning out that it maybe had when you entered the trade. Okay, so that's why I tell you don't trade with live funds, because you don't know what you're doing yet. As much as you think you do, you don't. So to protect yourself and also to keep you in the proper mindset for learning, you go through this process with me week by week by week. Okay, at charter level, 6 months consistently profitable in a demo. That is the only time you would ever consider, on your own determination, trade with live funds. So that's the answer to that question. I got thousands of. All right, so again, at the 15-minute mark, even last Wednesday's video, you'll hear me talk about the criteria that's here. So I'll be watching that going forward. If we lose the mean threshold here, then as I mentioned also, we're looking for the sell side liquidity resting below here, volume imbalance, and then the volume imbalance and fair value gap that exists down here. I'm not trying to predict that. We have lots of things that would have to take place before that. It's not going to be a slam straight down. I don't think it could. You never know what's going to happen anymore. But it's highly unlikely to have a big old smash to run straight in here. I think we'll have stair steps where we can work with it. But if we lose this, then I think then large candles on the downside would appear and then attack the liquidity resting below these equal lows and then make an attempt to go over here. But this is, that's the catalyst for that type of event. Otherwise, we're still inside the range, and you got to work with that. All right, so moving on over to euro dollar. All right, so euro. All right, so my notes say several things in here. Let me go out to a daily real quick. Pull that up for completeness, and we'll zoom in. All right, so I was looking for the likelihood of returning back into this up close candle, the body. Okay, notice I distinctively said the body, not the low of the wick, the body. So that's 110.83. And here it says 110.83.1, but 110.83 was the level. All right, so that was here on Wednesday. And then we traded this day here. We opened, traded down, slammed up right into that candle. Look at the high on that candle. 110.84 and 3 pipettes. Now, this is a daily chart. It's not a 1 minute chart like you've been seeing me slice and dice with precision on that time frame. On this time frame, that's how precise we are. So, again, go back and listen I think it's 16-minute mark, 16 minute and 8 seconds to 16-minute mark, 40 seconds. You'll hear me talk about that specific event. We hit it and it sold off. I'm going to show you inside here how you can use that information because I gave it to you beforehand. This is what you would do. I mentioned on last Wednesday how to take the information I give you on the forum. I'm sorry, in the weekly review. Let me zoom out here. So here's Friday's trading, Thursday, Wednesday. This is the midweek review. And I highlight this area right here on a 15-minute time frame at the 31-minute mark and 50 seconds. Okay, 31 minutes and 50 seconds. You'll hear me talk about this gap, but it's on a 15-minute time frame, and I'll get to that in a minute. All right, so I talk about the equal highs at 20 minutes and I think a couple seconds or whatever. 20-minute mark. I mentioned the equal highs on the 15-minute time frame, and I know we're on an hourly chart right now, but work with me here. The equal highs here, I said when we were down here, that was the next draw on liquidity. And I also said, from a daily perspective, that 110.83 level, and I'm not sure why it moved to 110.82.5, but it should be 110.83 as indicated on that. So you can see it's here, but I'm not sure why it prints and says that. But again, you can see the high goes to 110.84 and 3 pipettes. It's crazy, I know. So we have a fair value gap here and bullish order block. Again, for those that are new, which order block do I buy, Michael? The one that has the fair value gap. Okay, this is a fair value gap. We talk about that exactly in the last Wednesday's video also. Last Wednesday's video, for real, if you just study that video, seriously, like you have a ton of things. That video alone, I could have sold for the entire mentorship cost. I could have did a weekend workshop teaching the very things I gave just in that one single video, and you would have paid not enough in my mind. I mean, it's so chock full of real world, take it to the markets, make money stuff. It's unbelievable. And that's why I'm showing you these things. I'm giving you the actual time markers to go in and listen to me say exactly what is to unfold to script. Now, if these markets were random, if these markets were not following an algorithm that I got inside track on, tell me how this is unfolding like this. Because nobody gets this lucky. Nobody gets this lucky this long. Okay? So 20-minute mark, you're going to hear me talk about running the equal highs. And that's over here. And I believe that was on a 15-minute time frame. So let's go down to a lower time frame. 15-minute chart. Zoom out. All right, so, and at the 31-minute and 50-second mark, you'll hear me talk about this fair value gap. I say, I don't think it needs to go down there, but if it does, that's going to be a low resistance liquidity run to run the highs over here, these relative equal highs. And then you also have the lower threshold objective at 110.83 relative to the daily bearish order block. See how I blended all that together? Now, going over here, why did I say specifically it doesn't need to go down here? Because what I was allowing for, if they didn't drop it down first, they could have had a market protraction on the upside and left this range here, okay? They could have shot it up, created an imbalance, a BISI, and then come back and fill in that. Kind of like a little bit like this, okay? But forget this drop down first. I was personally looking for the initial protraction up and then buy a BISI with a bullish order block and then use that as a target. But I also mentioned that this is the actual lower case scenario where we can come down and fill in that imbalance, that fair value gap. If it trades down to that level, it'll shoot up and hit the objectives as we indicated, which if we zoom out, here's our relative equal highs. Remember, it was trading here. I said it was going to reach up. Let me zoom in a little bit more so it'll look a lot more familiar to you. Here's those relative equal highs that I mentioned at the 20-minute mark and some change in terms of the seconds. And if you have any doubts, just watch last Wednesday's video, the entirety, and you'll see that I may have a couple seconds off in terms of the timeline, but you'll hear me say these things. These equal highs are taken out as the next upside draw. After it hits this fair value gap, it'll run up. From the daily, we had already arrived at this level anyway, 110.83. Okay? So, if you had done that, if you had practiced, if you would have waited for this to unfold, okay, look what was available to you for practice. We're going to scrub over here. So here's the market trading into that fair value gap, hitting the bullish order block, closing in the imbalance. Here's your fair value gap low end. You have the high of 110.16 and 1 pipette. Okay? 110.16 and 1 pipette. The low comes in at, not that, it's going to show the trend line. There it is. 110.16 and 2 pipettes. I was only off by 1 pipette, okay? So the market comes down, hits that, that's where you would be buying. What are you waiting for? The market to reach up into those equal highs and then clear the 110.50 mid-figure, which would essentially clear out those equal highs. 110.50, zoom over here. Okay, here's those equal highs. What's the high on that candle right there? 110.49, okay? What's the high on here? Because that's the other relative equal high. The high is 110.51 and 2 pipettes. Okay? If that's the level we're looking for relative equal highs, what essentially is that? What level is it? Because we're reaching for liquidity. So is it the first level you get to, like for targets, or are we looking beyond that? Above it, right? So 110.52. Okay? 110.52. So if we're looking for a sweep on stops, what's the next protocol? We look for scaling 10, 20, and 30 pips. So if we use this 110.51 and 2 pipettes, calibrate it to a reach on liquidity of 110.52, 10 pips above that would be what? 110.62. 20 pips above that for a 20 pip grade sweep on liquidity would be what? 110.72. And finally, 110.82 would be 30 pips above these relative equal highs. Scrub over here. What's the high? 110.84 and 3 pipettes. We're only off by two pips there. But remember, we have that 110.83. So we have 110.82, which is 30 pip stop sweep, graded above these relative equal highs, plus an old daily bearish order block using the body of the candle that I told you specifically in the last recording. Then we have a overlap of there's confluence. So you have a beautiful opportunity to trade an optimal trade entry here. If that's your pattern, if that's what you're going to settle on, if that's your model, then that's what you can do. Use that one. You don't like the optimal trade entry. You like breakers. Well, luck would have it, you have a breaker. You have a low here, the highest high in here with up close is here, there. So you use the body, the open is down to 110.28, and the low trades down into 110.28. And I'll show you what that looks like. Folks, you just can't get this kind of stuff anywhere, and least of all for as little as you're paying. I hate to sound like a salesperson because I got accused of it on Twitter. But really, I mean, seriously, you're not paying anything compared to what you should be paying. I mean, I pay a lot of money to learn these lessons, okay? It costs a lot, and what you're spending is nothing. And I don't mean to be offensive, but it's just truth, and you have no idea. 10 years from now, you're going to look back and say, man, it was nothing. But anyway, I'm not trying to put a hardship on you or make you feel guilty, but here's your breaker. Up close candle, the highest one, that's your swing high. Project that out in a distance in the future. The market creates a run over this short-term high, break a market structure, come back, breaker, same targets exist. 10, 20, 30, and previous daily bearish order block. So here's your entry there. Maybe you didn't see this as a breaker. Okay, you should have, but if you didn't, no problem. You have that same element here because price is fractal. You have this breaker. Again, body of the candle. Last up close candle before the down move. What does that happen? Why is that a breaker? This swing low. See, I know what you're thinking. I know. This short-term low here, there's going to be sell stops resting below that. The market creates a protraction lower, clearing those stops, picking up fair value, bullish order block. IPTA allows bank traders to pick up a long entry here, then displacement. Rebalance to the breaker. Boom, there's your other buy. You also have a fair value gap in here that you could have used, but also keeping in mind that you have a breaker here and the imbalance between here, your stop would have to be below. You don't have to be all the way down below this low. It would be just right below the imbalance plus spread, all right? And there's your run to our objective that we outlined on the euro dollar. Now, since then, the market has gone pretty much nowhere, chopping back and forth. But that's a beautiful example of everything I outlined in Wednesday's video. Now, can you find 25 pips in that? Absolutely. Certainly. Can you find 30 pips in that? Yes, you can. Can you find 50 pips in that? Yes. How about 75 pips, Michael? Because you said you look for 50 to 75 pips. Low. 16. High. 84. Factoring the spread, 75 pips is in there, but could you slice and dice that 75 out? Probably not. But it's real close, isn't it? So that's why it's a range between 50 to 75 pips. That's what I'm looking for. I don't try to trade all the time. These last 6.5 weeks, I've been trading a lot just because I have a lot of doubt in the new people coming in. Because they came in, they're excited, they go online, they're talking to everybody else, and oh yeah, I'm in part of ICT's mentorship. And then they start sending them things where I was trolling Twitter, okay, and baby pips, showing ridiculous nonsense that I was entertaining myself with. But now clearly people are second guessing that because now what I'm able to do, I didn't just learn how to trade, folks. It didn't just happen overnight. I've entertained myself for a long time. So to remove all that doubt, okay, I did something I felt I wouldn't have to do, but I did. So you guys watched me take, $5,000 to $40,000 in 6 weeks and 3 days. And that was nothing. I could do 4 times that. And I don't want to sound like I'm bragging, but I'm just being honest. I could do 4 times that in that same amount of time. So I don't need Robin's World Cup trophies to say I'm a good trader. Any given time I want to show you, I can do it. And because I can do it, and I know it doesn't bring you anything. It doesn't make you a better student here. It doesn't make you learn any faster because you seem to be able to do that. But I did it just to ease the anxiety that I got from the folks that are moving into their second month now. Look, if you don't want to be here, you don't have to be here. I don't need your money, but you're not going to leave here saying that I'm a fraud, I don't know how to trade, and that I don't call these things before it happens. Because I absolutely do. And now you all can see, just like the rest of the world can see I can trade. I can trade very well. So again, there's no reason for you to worry. There's no reason for you to rush. I'm not scamming you. Everything I'm telling you, believe me when I tell you, there are industry heavy hitters in here. And yes, I know I'm not going to say your name and who you are, but you would be surprised who's in here taking notes with you. And that's all I'm saying. They know what they're looking at is completely top-notch and nowhere else found. You see me outline the charts before it happens. I tell you folks exactly the levels before it even does these things. On Twitter, I'm recording videos just doing it, and they don't know what I'm doing unless I'm annotating the chart. And they don't know why I'm picking those things out. But you're learning all of those things here. But you have to give yourself time. Allow yourself to absorb it. It's 27 years worth of stuff in my head. I cannot articulate it inside of a year or 2 or 3. It's going to be a while. The main concepts, I can give it to you, but you're going to have to learn over a period of time spending your week with me. your Wednesdays, and your weekend. 2 days out of the week. You have to do those things. Otherwise, you're wasting your time. Okay? So that's the business there. Again, we're waiting on Monday for more information. I don't have any other trades for Euro. And here's cable. What am I showing here? The imbalances and such. We were looking at... what was I talking about on that? Let me see. For cable, I have... I mentioned the highest intermediate term level we would be looking for 123.75, and I think that was on daily. So let me pull up another chart with cable. Go to daily, and I apologize. I'm really not that organized today because I had to take my son to soccer, and when I got home, my wife hit me with we got plans tonight, so I'm trying to be dad and husband and mentor. It's just too much at one time. All right, so what was I saying here? I know we talked about the equal highs here on the daily chart. I said that was the near term objective, and that should have been around 123.10. Yeah, that's what that is. 123.10. I said that would be the near term draw on liquidity, and 123.75 would close in and take us right back up into the low at 123.80. It could spread to that level here, which would be the bearish order block in this move. This one here, I wouldn't use that one. I would use the body here, because this entire range for the bearish order block, closing up the imbalance to 123.75 would be there. But near term, all the draw we were looking for was initially above these equal highs. So let's go back and see if my other chart has that annotation. Okay, so we have that short-term relative equal high, and this is a hourly chart. And we were trading in here on, let me put the daily dividers in here. So here's Friday, Thursday, Wednesday. So Wednesday we were trading here, and we wanted to see the market drop down and create a Judas swing and then expand on the upside. You can see my trades, and I didn't want you actually to see that, but nonetheless, it is what it is. I mentioned on a 15-minute time frame also, there is we covered this, explaining exactly what the fair value gaps look like and how you can go in. And once I give you the draw on liquidity, use a 5 and 15-minute time frame to look for that as a entry drill. All right, so we have a 1-minute chart here on cable. You guys watched me do the recording on non-farm payroll. I was looking for the market to come down into here, give me an opportunity to buy on a limit. My limit order would have absolutely been filled. And I was looking for the first objective, trade around 123.20, 123.25, and then I would have scaled off something there. For whatever reason, the demo just froze up. It wouldn't do anything. It just sat there. Now, I was listening to YouTube at the same time in the background, so I still had connection from my internet, so it wasn't my internet dropping off. But as the market would have dropped down and hit my limit order in here, it didn't happen. And then all of a sudden the platform came back, but it was up here already. So limit order wasn't going to get tagged because it had missed it. Nonetheless, that is the tomfoolery stuff that goes on around non-farm payroll. When I was trading with FXCM, I got smacked around by them because they did these kind of shenanigans. Typically, non-farm payroll will have a lot of movement in the past. It's not so really volatile anymore. Sometimes it'll probably fall back in favor where it becomes a real big economic, driver up and down, create a lot of movement. But really, it's been really mooted for a lot of time in recent years. It used to be a big deal, and it's not so much of a big deal, but it is a nuisance if you're trying to be precise. It's just, I can see things in it, but sometimes it just knocks me out, or, well, in this case, it wouldn't let me participate. So I knew once it started pulling these shenanigans, I was looking for a run to the 123.38 level, and you see me get that in here, trading off of order block, BISI, filling in, went long, and I was looking for 123.38 as the draw on liquidity, but I wanted to get out at 123.35, and our high came in at 123.35 and rolled over, and then I sold short in here using a breaker, relative equal highs, the down close candle before the run up. That was my short. I sold short there, added another here, added another here, and then I added more here. And then between that and euro dollar and dollar CAD, that's how I pushed that account to $40,000 on Friday. Those were the trades. So if you're practicing, okay, one of the things you want to start doing is don't use limit orders in the beginning when you're practicing, because it'll just frustrate you. If you're able to watch it as it's trading, like if you see the imbalance in here of SIBI, as the market trades up into it, as it's creating that big bold candle here, closing that in, at the market, sell it there. Put your stop loss above a swing high. You can't use it here because it's equal highs. It could very easily just poke above that. Your stop loss would have to be here. Okay, it's not a lot. I mean, it's less than 10 pips. But you would be able to ride that down, low resistance liquidity run below here, and then you start doing your scaling below that. Well, your low is 122.93. 10 pips below that would be what? 122.83. Okay, so 122.83 is in this area here, and the low is 122.82. So you get that full run of 10 pips below here. 1 minute charts are the same thing I teach you to do in the low resistance liquidity runs on month 1 content. We're just applying it to a 1 minute chart. And you get so many practice sessions using the 1 minute that you can do over and over and over again. So many different setups if you have a couple pairs to look for. Now, you're not trying to add 28 pairs to your study, but you are looking for scenarios across different currencies when you're practicing. Okay, when you're practicing, you can do that. When you're trading, you want to focus in on one pair and then just dial in, because then you have money at risk. But that's that. What else do I have for cable? I have 33 minutes and 6 seconds for cable, so I don't have an annotation for what that is. So look at 33 minutes and 6 seconds for GBP USD. I'm not sure what I'm actually saying there. So again, look at Wednesday's video at that time. It should be relevant to cable. And then on dollar CAD. Okay, dollar CAD at 48 minutes and 30 seconds to 56 seconds. 131.56. 131.56. All right, so this level down here is 131.58. And I believe I was looking at a 4-hour chart. Yeah, it was a 4-hour chart when I was talking to you about this. And again, you'll see this in the video. Go and watch the dollar CAD portion. Okay, and at 48 minutes and 30 seconds to the 56 second mark, you hear me outline this fair value gap down here, imbalance, that will rebalance to 56, I think it's what it's going to say here. The high, yep, that's it, 131.56. So it would rebalance to this high on a 4-hour chart. So you start your imbalance here, and then we're going to talk a little bit about this, and then we're going to close this video. So you have the imbalance here up to this low. Now, why this low? And why this high? This single candle, this big green candle, passed through the price range of this candle's high at 31.56 and 3 pipettes, and it only came back down when it went up this much, think about that paint roller analogy I like to use. If you applied paint to the paint roller and you're pushing it on the wall up, you got a lot of paint. As you start going higher, you get spotty, you get spotty, you get spotty. And then to get an even delivery of paint, what do you have to do? Roll that paint roller down. And it was only taken down to this price level. It left this portion down here. And it went higher. Then it came down to here, still leaving this portion between this low and this high open. This is all open. So all of this price range and all of this market structure is being supported by this single toothpick. So imagine this being a car and you're balancing on one single toothpick. Can it support that? No. And then you finally get it break down. I gave you guys on dollar CAD the near-term sell-side liquidity pool here, and then these relative equal lows here, which will look more apparent on the hourly chart. And then below here, well, it's this one and this one's what it is. And then you have the imbalance here, okay, that we mentioned that would fill at 131.56. Now, that's what I have highlighted here on the 4 hour. Now, watch what happens when we go down to an hourly chart. Okay, here's where price was. I said we would probably see it roll down. It did. It gave a 30 pip run. There's your 30 pips, 25 to 30 pips. You hit that, you have made your weekly objective. As a new trader starting out, learning how to do this, that is a career. And it sounds funny, it sounds silly because you see all these other folks and me, hundreds of pips available each week. Who cares? You can't do that when you first start, so don't think that you can. Don't, because you're just going to put unrealistic expectation on yourself and demands that you can't meet, and you're going to frustrate yourself and say, I said I can't do this, and quit. And you should not do that, because you're going to cheat yourself out of a beautiful experience that no one really understands until they can experience it themselves. So give yourself the chance. I forgot to mention something. Let's go back up to the 4 hour. I apologize. I'm being rushed by my wife right now. So, oh, Huddleston, you're putting all the blame on your wife recently. The women are going to be upset with me. Look, guys, you got to back me up. All right, so we have a fair value gap right in here. All right, see that? We have the low of this candle here, and we have the high of this candle initially. So as the market was trading in here, it trades lower. And then it had a retracement. What's it trade back up into? The breaker. What? The breaker. Down close candle before the run up, clearing out these equal highs. That run up here on that and stops. Take us right back to here. So we went back up inside of the breaker, cleared a fair value gap. Look at the bodies of the candle staying inside of that fair value gap. Now, yes, the wicks go through that. Who cares? The close on this candle, let me take that off. Oops, didn't want to do that. Let me put that back on. There you go. So we have this fair value gap here. The close of that candle comes in at 32, 37, and 6 pipettes. So if you were selling short in here, okay, with the expectation that we could probably run a little bit higher up into this low here. All right, so if you used a 20 pip stop loss and you were selling short at the close of that candle at 132.37, 20 pips above that would be what? 132.57. Look at the high, 132.44. Did you get stopped out? No. The next candle went slightly higher. Did it go to a point where you'd stop out? No, 32.45. So you're trading at a fair value gap with the expectation we're going to go lower. Where are we going? Where do we outline it? Below these relative equal lows. Over here. And again, that's around that 48 minute and 30 second mark to the 56 second mark of the 48 minute portion of last Wednesday's video. And I said that this range in here would fill in. And it could close up on a 4 hour basis at 131.56. Okay. But now watch what happens. We're on that 4 hour chart and we're looking for this range here that's shaded. That would be the close on a 4 hour basis. But you have to dial down on lower time frames to calibrate your levels to get more specific precision. So 1 hour chart, we're back into it. Right in here is that 4 hour gap that's shaded. Look what you end up with right here. You had the high here at 31.58 and 2 pipettes. Then you have this candle's low at 131.64 and 1 pipette. So right away, we have a new range. And I'm just going to use a horizontal line to make this easier for me. You're getting lazy, Huddleston. You're getting lazy, man. Come on. Do what you're supposed to be doing. So in between the red line and the blue line, that is the real fair value gap. Okay, so that's really where it's going to want to go down, inside that larger shaded area. And right below these equal lows, where's it going to go to? That level right in here. Now, between these two levels, you have, what is that? The low is 131.64, and the high comes in at 131.58 and 2 pipettes. Okay, so what would be the level? What's the actual level you would look for? Well, between 58 and 64, that's 60. So you can look for 131.60. That's the level you would aim for. It could go down to a low of 58.2. Okay? And that's what we have that blue line on. Now I'm just going to scrub over. You can see what actually happens there. So there's equal lows here and here. So the liquidity resting below that is what I outlined. And here's the breaker. Market trading up into fair value gap. Where's it going to reach for now, Michael? I already told you. Here's the blue line. Where's it trade to? The low, 131.57 and 8 pipettes. You should have gotten 131.60 for sure. That's in the middle part. But look, even if that's don't even use that. Look how close that is. Like, we're literally only talking about a pip. 1 pip. And I'm sure everyone's different in terms of their brokerage low. If you look at this candle here, 1800, and the low is 131.57 and 8 pipettes. I guarantee you somebody has 131.58 and 2. Or they probably got 131.50 even. Something like that. It went below what we were looking for. Now, I didn't call this specific level, so I'm going to be very clear about this. Because they're saying, "Oh, you are a liar. You're saying you said you called this level." Listen, I just showed you how to calibrate it. Okay, who cares if I was off by 2 pips? That's good enough for me. But I'm showing you how, because I didn't do it in the video, to break it down. But I taught you to do this in the core content. So again, people that are charter member levels, they will be able to tell you, okay, I'm lying if I did not teach you to how to calibrate the fair value gaps. As a matter of fact, it's actually inside of the weekly reviews, because I was doing more work on the fair value gaps. So yeah, it's not even charter member. Everybody can go back and look at the recordings about fair value gap and how to calibrate all that. There's BISIs and SIBIs and how we get to the actual real draw on liquidity. So I gave you another example here. But nonetheless, even if that's not even drawn into this discussion, it already did enough from up here, went to a fair value gap, which I didn't bring your attention to that, admittedly, because I said, we're looking for a 30 pip run. It gave 30 pips, and then my attention was drawn somewhere else. But at that 48 minute 30 second to 56 second mark of last Wednesday's video, my attention was here, which means your attention should be there. And you can see that here when you zoom out, how beautiful the price was delivered right there. Okay, so when you see these things pan out every single week, you should not be fearing missing any move. You should not be thinking, "Oh, I got to get in there and trade. It's going to stop working." This stuff's been doing this forever. Okay, it's always been doing this. When I discovered it, it didn't just start happening in the market. Nobody just was teaching it or talking about it. Now, I am not teaching you this and believing that because I'm teaching it, it's going to stop working. It's never going to stop working. To answer this again, and I've said it before, and I'm going to close the video. Why am I confident, or so confident, that teaching this won't break the algorithm, or they'll change the algorithm? The algorithm didn't exist back when they had Open Outcry. The market dynamic is the same. They have to take price lower. They have to take price higher. They're not going to do it at a snail's pace. That means they're going to do it quickly and create imbalances. Those imbalances will always exist. When we had open outcry, it would create literal gaps where there would be no bar or no candle in that range. And we would use those pockets to work with. When we moved to 24-hour trading and electronic trading, for me, it became so easy because your eye, once you think about it, you know what a fair value gap is. You know what a BISI is, a SIBI is. You know what these things are. And when you look at price, I guarantee you that's the first thing your eye goes to. And that's what you're supposed to see because you've been trained by me. No one else looks at the market like that. We do, or learning from me. It's a paradigm shift. You see things that has always been there, but you never understood the importance of it. And I haven't even scratched the surface yet with fair value gaps. So even because you see them and other people at the mentorship have learned it because of things being shared, they don't know anything. They don't know anything. There's so much more to this stuff. But it's a foundation. It allows you to have a understanding. When I say a fair value gap, if I say a BISI or a SIBI, you know what that is. And if I say, hey, look at a 4-hour chart of dollar yen, not that I probably will because I don't like dollar yen, but let's say I did. And I say, look at the BISI on the 4-hour dollar yen. You're going to know exactly what I'm talking about. You're going to know exactly what I'm talking about. I don't need to pull a chart up. If I say, look at the consequent encroachment of the 4-hour BISI on pound yen, you know exactly what level I'm talking about. There's no ambiguity there. You know exactly what I'm calling. That's the language I had to create with you all. That same language is what was being designed for my children. So you're learning the language I created for my kids. This isn't for your benefit. This is for their benefit. And all of this is for them. You are just guests in my house. Every week, you're here as a guest. So respect it. Okay? Don't trash talk me on Twitter. Okay? And tell me something that I know is nonsense. Okay? Because if you're in here, you consider yourself lucky. Until next time, wish good luck and good trading.